Hey everyone, Simon here. In this short video, I just want to share with you a couple of snippets from the Options Academy Accelerate members video that I think could be really relevant for asset allocation moves and sector rotation over the coming days and weeks in the US equity market. So first of all, let's start by looking at a chart of the US dollar, DXY. And what you can see here with this green dotted line is that the US dollar hit a symmetry target on Friday. What does that mean? Well, this move from that swing low to that swing high is the same size as the move from that swing low to that swing high. Now, you'll notice there's a gap there. We missed the target by a tick. Near enough is good enough in technical analysis. The other thing that's happened with the dollar is we've got a potential bull trap in play. What do I mean by that? Well, this orange line here is the previous swing high level. And what happened is on Thursday, we broke through it. Friday, we consolidated above it. And today, it looks like we've traded back below it. This would constitute a false breakout or a bull trap if, in fact, the dollar continues lower here. So it's a risk well worth keeping an eye on. So why are moves in the dollar important? Well, a rising dollar is generally considered a risk-off move. If the dollar is rising, risk is being taken off the table. That will generally mean money is being reallocated back towards bonds. And within the equity market, it will generally mean money is being allocated towards tech, and in particular, big tech. All right, your FANG stocks. They are seen as very high quality, very low risk. And when the dollar's rising, generally tech, and particularly big tech, mega cap tech, will outperform. The more cyclical sectors will underperform. Now, if the dollar falls from here, that would be a risk-on move. And that would generally be coincident with rising equities, rising commodity prices. Let's face it, that these assets are all denominated in US dollars. And so if the value of the US dollar falls, generally it makes it easier for their value to rise. And in that sort of an environment, a risk-on environment, you find broader participation in the equity market rally, and you could certainly see more cyclical sectors like industrials, financials, the Dow start to outperform tech. Doesn't mean tech falls, but tech could become an underperformer, whereas it's been a clear outperformer the last few months. Let's check in and see what's going on with bonds. We'll look at TLT, which is the major ETF that tracks bonds. TLT has been an uptrend since March. It's had a minor downtrend here. You can see we've got a high, a low, a lower high, and a lower low. What happens here, I think, is really, really crucial. Now, this has been a strong rally. We've closed above the 78.6% Fibonacci retracement level from this high to this low. That means odds are we at least retest this high. Okay, and in fact, if we even redraw these levels, these Fib levels from that swing high there, you can see we've got two consecutive closes above the 61.8% retracement level. It in fact means we're a very good chance to at least retest that high there. Now, if TLT rallies up here, or even only up to here, and fails and rolls back down, that's going to have asset allocation implications. Falling bonds, like a falling dollar, is a risk-on move. When bonds fall, bond yields rise. And rising bond yields are generally a signal that the market's view on reflation is becoming more favorable. You know, the 10-year bond yield is in effect a function of the market's view of economic growth and inflation. So where TLT heads from here, I think has got fairly important asset allocation implications. If we see bonds rise, and TLT is the easiest thing to watch, but if bonds continue to rise, it will favor things like the NASDAQ, the tech sector, communications sector, things like that. If, however, bonds sort of reach a peak near here and they roll over and fall back down, that's going to favor reflationary sectors, things like XLF, XLI, the Dow Jones. They would be in favor. Now, if bond yields rise, if bonds fall, which is what I'm talking about here, it doesn't mean tech falls. It just means tech is likely to underperform. But I think this is worth watching because everybody is kind of assuming that the reflation trade is dead. If we do see TLT roll over here, and if we do see DXY roll over here, that will be a really good signal that the reflation trade is about to pick up again, and you'll want exposure to things like financials and industrials. I hope it helps, and I wish you great trading.